Hi, everyone, and welcome. Thank you for joining us today. I'm Haiku, and I'm excited to kick off this session on a topic that's front and center for so many growing product-based businesses: how to successfully integrate Cin7 and QuickBooks. If you're here, you probably know the challenge: disconnected systems, unreliable financial reports, and the constant tug of war between operations and accounting. It's something we see all the time here at Fiskal. Businesses scaling past 1 million, 5 million, even 50 million revenue, but still struggling to get accurate visibility into inventory, COGS, and cash flow. That's why this conversation matters. A properly designed Cin7 and QuickBooks integration doesn't just cut out manual work and sync errors. It gives founders and operators real financial clarity, builds confidence in reporting, and sets up a scalable foundation for growth. So that's why today we're fortunate to have Salomè B here from Fiskal, who has helped businesses like yours untangle broken setups, fix chart of accounts mapping, and turn Cin7 from a headache into a real growth enabler. She'll walk us through some common pitfalls, best practices, and what a truly optimized integration should look like. Without further ado, I'll hand it over now to Salomè to dive in. But as a reminder, there will be a Q&A section at the end. So as questions come up or you can think of some question that you would like to ask, drop it in the chat here on YouTube, and I'll make sure to get covered at the end. So yes, Salomè, the floor is yours.
Thanks, Haiku. Yeah. Hello, everyone, and a very warm welcome to the QuickBooks Cin7 Cookbook. I'm Salomè B, a financial controller here at Fiskal, and I'm absolutely thrilled to have you join us today. Whether you're a business owner juggling 1,000 hats or part of a dedicated finance team striving for precision, you know that your inventory is often the heartbeat of your business. But let's be honest, sometimes that heartbeat feels a little irregular, especially when your inventory system and your accounting systems aren't quite in sync, right? Today, we're going to demystify one of the most crucial yet often overlooked aspects of financial health. It's the integration of two key systems, Cin7 Core and QBO, and ultimately reconciling your inventory figures between the two systems. Think of it as bringing two very important friends, Cin7 and QBO, to a friendly agreement, ensuring that they're always telling the same story about your inventory. Because when they don't, it can be a silent killer of profits, leading to misstated financials, incorrect tax liabilities, and even missed sales opportunities. We want to help you avoid all of that today. So over the next 30 minutes, we'll embark on a practical journey. We'll start by understanding the foundations, then looking at the transaction triggers in Cin7. So basically, what happens when and what does this mean? After that, we'll look at the key integration settings you need to look out for and ensure is correct. Then we'll dive into the nitty-gritty of reconciling your sales, purchases, cost of goods sold, and the all-important inventory on hand figure on your balance sheet. Our goal is to equip you with actionable steps to ensure your reported inventory value is always accurate, giving you true peace of mind and a clear picture of your business's financial health. At Fiskal, we believe that robust financial management isn't just about crunching numbers. It's about empowering you to make smarter decisions and grow your business with confidence. So let's get started. First things first. So let's set the stage. Imagine Cin7 Core as the bustling warehouse manager. It knows every single item, where it is, when it came in, and when it left. It's all about the physical movement of your inventory. QuickBooks Online, on the other hand, is your meticulous accountant. It records the financial impact of every single one of those movements. So the magic and sometimes the mystery happens in how these two systems communicate. Cin7 Core should always be your source of truth for inventory related transactions, and QBO should report on it. So because QBO is focused on the accounting side and Cin7 is focused on your bustling warehouse operations, there are some different transaction triggers that needs to be considered and understood when we dive into the recon. So our transaction triggers. Inventory movement can be categorized into two main cycles, sales and purchases. At a high level, sales will originate with a sales order, then the customer gets invoiced, you receive payment, and inventory is picked back and shipped. Sales cycle. Purchases, on the other hand, will start with a purchase order, Supplier invoice received, receive the inventory, make payment. Simple purchase cycle. Okay, let's look at the sales cycle. When a customer places an order in Cin7, it reserves inventory. Great. But financially, nothing happens in QBO yet. It's like putting a hold sign on an item, but it's not being sold yet. When you invoice the customer, that's when QBO springs to life, debiting accounts receivable and crediting revenue. Simple, right? But here's a crucial point. The actual shipping of the inventory is a separate event. Movement of stock, separate event. Only when that inventory is picked, packed, and shipped does Cin7 tell QBO to debit your cost of goods sold and credit your inventory account. This means your sales revenue and your inventory movement aren't always linked in real time. This timing difference, especially around month end, is a prime suspect for reconciliation headaches if you're not aware of it. It's like the revenue party started, but the COGS party is still waiting at the door for the goods to arrive. So make sure to keep shipment timelines in mind when trying to reconcile. If you have a short period between a customer placing an order and the item being shipped, like most retail businesses, these variances will be very small. However, it can be a very different story if there are longer lead times or with made-to-order sales, and important to note that. Then over to the purchase cycle. The purchase cycle has its own nuances. A purchase order in Cin7, no QBO impact yet. It's just an intention. Even if POs are synced to QBO from Cin7, it remains an intention, and there is no financial transactions recorded at this stage. If you pay a deposit to a supplier, QBO records that deposit. But the real fun begins when you receive the supplier invoice. Cin7 will typically debit goods invoiced not received and credit payables. Then, when the goods are physically received, Cin7 debits inventory on hand and credits goods invoiced not received. You will note Cin7 always follows the physical movement of your inventory, and that's what we want. So this is an example of the perfect world and ideal purchase cycle. We all know that this is not always the case. Well, most of the time it's not the case. So there are three scenarios to take note of when you do the reconciliation between Cin7 and QBO, as it may lead to variances, but variances that can be understood, explained, and reconciled. So my first scenario is where the PO is not fully received. So it's a partially received PO, and partially received POs will remain in goods invoiced not received until the full PO is received, which means that inventory on hand will only be debited in QBO once the PO is closed. Okay, so it causes variances between my inventory on hand figures. Second scenario is where the PO price differs from the supplier invoice price. So the unit cost per the PO is used to calculate cost of goods sold when there are any stock movements. If the invoice unit cost is different from the PO, Cin7 will want the inventory items at the invoice unit cost and will actually cancel any journals already processed for those stock items and write new ones to reflect the accurate invoice unit cost. So if your accounting periods are locked too early in QBO, these adjustments can't happen. It's like wanting to change the recipe when the cake's already in the oven. Can't happen. Okay, so then the last one to take note of before we looked at some critical settings is just the flow for when inventory is received before the supplier invoice is received. Cin7 will then typically process the inventory received to goods received not invoiced using the PO unit cost until the PO is fully received and the supplier invoice is received. Then your normal inventory on hand process and your accounts payable process will happen. This brings us to the unsung heroes of reconciliation, your integration settings in Cin7 core. Things like clock dates, account mapping, and how sales are synced is what we're going to look at. So first things first is to have the right QBO subscription. So Cin7 core can only integrate with QBO Plus and QBO Advanced. If you already have a Cin7 QBO integrations, this is already checked, it's fine. Good. But if you are considering a new Cin7 core system or integration, it is something to take note of. Also to note is that you do need to disable inventory tracking in QBO when Cin7 is integrated to QBO to make sure that there's not duplicate COGS entries. Because if it's not disabled, QBO will continue tracking inventory and want to recognize COGS based on the inventory movement. But Cin7 is already doing that job. So very important, make sure that inventory tracking is disabled. Next, we want to review the account mapping and chart of accounts and ensure that the chart of accounts are updated from QBO. We want to compare apples to apples. And then we review the mapping of those accounts in Cin7 Core. So this will ensure that the transactions are going to the right place and that we are looking at the right accounts when we are reconciling. Very important, otherwise revenue can go to the balance sheet and inventory to the income statement. So just check mapping. And then the all important lock dates. These are the financial, how do you say it? It's basically the bounces of the financial period, preventing unauthorized changes to historical data. So setting them correctly is critical. Ideally, these should be set to the date of your oldest outstanding purchase order in Cin7. Think of it, if you close your books too early and a supplier comes in for a PO from that locked period, Cin7 can't make the adjustments. Remember, we said that Cin7 will go back and cancel the journals and write new ones. If there's a lock date in place, if the bouncer is in the way, Cin7 can't get there. So we just need to make sure that open POs falls within an open period in QBO. Finally, we look at our sync status and how transactions are synced to QBO. So first is transaction consolidation, and sales consolidation is exactly that. Cin7 Core syncs through a consolidated transaction for sales and COGS, which is normally daily, as a bulk. So the individual line items of each sales transaction does not sit in your QBO. This will not affect your process of reconciling, but might affect your approach to investigate variances and doing some troubleshooting. So while consolidation can make your QBO look tidier, it can also hide granular details you need for troubleshooting. So it's a trade-off between simplicity and forensic detail. Just note that this information is not disappearing. It's still sitting in Cin7 Core, but it's not in QBO. And then if you have AutoSync activated, it will sync automatically on a set period, daily, hourly, 6 hourly. So you know that the transactions is always in QBO. And if it's not, then you would need to manually sync the process or manually sync to process the period's transactions. Okay, so before you even start reconciling, you need a clean slate. This means running a QBO sync in Cin7 and diligently clearing any sync errors. Sometimes you'll encounter lock date errors, the bounces are in the way, or even decide to skip minor non-critical errors. Just make sure you understand why you're skipping them and document everything. It's like tidying your desk before a big project. You need to know where everything is and what's just cut so that it can be moved away. Now, let's roll up our sleeves and dive into the actual reconciliation steps. Since we are working with inventory, it's always good to refer back to your inventory formula. So, opening balance of inventory plus my purchases, less cost of goods sold, give you closing balance of inventory. To reconcile your closing balance, each component is considered separately. So the reconciliation process is set up to do exactly that. And the steps are to establish a starting point, initial sync and clearing sync errors, purchase recon, sales recon, cost of goods sold recon, and finally our inventory on hand recon. So first step is to establish a starting point. The goal is to determine a point in time where we know COGS and inventory is correct and are aligned. So like we said, we need a clean slate. So this is our clean slate point. It's typically the previous year end. It can be the previous month, previous quarter, previous half year. Like it depends on your financial processes and the recons that have been done before, but we want to know what that starting point is and at what point in time are we certain that COGS and inventory is correct and aligned. Next, we do a sync to QBO to ensure all transactions are processed and we clear any sync errors. You will note in your Cin7, if you go to your company name, QBO, if it looks like this, it says require sync, then you know, time to run your sync. The corrections, if you do make any, or if you have any sync errors and you do any corrections, make sure that you do the corrections in Cin7 to ensure alignment between the two systems and that you run the sync again after you've made the corrections. Otherwise, the correction is sitting there, but it's not being affected in QBO. Now the fun part, getting into the numbers while we're all here. So we start off with purchases, the second component of my formula. This is about ensuring that every piece of inventory you buy and its associated cost is accurately reflected in both systems. We start with a review of your inventory and direct cost accounts in QBO for manual entries. You will note that this is a recurring theme because manual interventions are often the culprits behind reconciliation nightmares. System-generated journals have a certain look and feel. Anything else needs a closer look. Manual journals should be identified and investigated. If they make sense and needs to be there, ideally we want to allocate them to a separate account so that we can recon an account in full that's just system generated to the Cin7 core system. Then, after that's been cleared, for a detailed comparison, we're pulling the purchase invoice and credit notes report from Cin7 and the purchase list from QBO to compare it on a transaction basis per supplier for your reconciliation period. It will show total purchases in Cin7 for that supplier, total purchases for QBO for that supplier, and comparing the two. A key tip here is remember that Cin7 typically tracks inventory-related suppliers, while QBO is all your operational expenses. So when doing the comparison, focus on the suppliers that are common to both systems, so your inventory suppliers. It's like comparing apples to apples, not apples to apples, oranges, and bananas. Next, we move on to sales. Our goal here is simple. Ensure the revenue recognized in QBO matches the sales activities recorded in Cin7. So first step, review your sales accounts in QBO for any manual entries. Ideally, all sales data should flow from Cin7. This makes sure that the inventory movement is tracked for those sales. So even if there are manual sales raised in QBO because it's not coming through a sales channel, these needs to be added to Cin7 to track the inventory movement in any case. So if you find a manual journal or manual entries in your sales accounts, that's a red flag. It's like someone trying to add numbers to your bank account without going through the bank. It will throw everything off. So investigate these, correct them, and get them out of there or into Cin7 if they have to be there. Next step is to do a P&L comparison between Cin7 and QBO for sales revenue. If there are significant differences, you might need to do a detailed line-by-line invoice comparison. Cin7 has a sales invoice and credit notes report that's perfect for this. It can be a bit of a marathon to run, so tackle it month by month. Once you've made any corrections, remember to sync Cin7 and QBO again. The golden rule here is never, ever, never, ever create manual journal entries in QBO to force sales figures to match. That's just sweeping the problem under the rug, and it will come back to haunt you. This is just a example of how the comparison looks. So we have our QBO sales from our P&L, we have our Cin7 sales accounts from Cin7, and then the difference. You'll note there's a percentage difference at the bottom. We want that as close as possible. With there could be some variances based on timing differences or how discounts are being treated in QBO. So that's a discussion with the business owner and what variants are we comfortable with, and how deep do we go to clear this. COGS, cost of goods sold, our next component is a critical figure. It directly impacts your gross profit and ultimately your bottom line. So reconciling this accurately is a non-negotiable. You guessed it. First step is review your COGS account in QBO for manual entries. Any manual adjustments here can significantly distort your profitability. COGS is a direct reflection of your inventory movements, so discrepancies often point to deeper issues in how inventory is being tracked or valued. So, like I mentioned, if we have manual entries, move them out to a separate account so that we can deal with those on their own. But stock movements should always come from the system in the automated accounts. It should be synced through. So after that, we compare the COGS figures on your profit and loss reports from both Cin7 and QBO. If they don't align, it's time for some deep detective work. You'll need to dive deep into the detailed transaction report, like Cin7 financial transactions report, filtered for your COGS-related accounts. Then cost of goods sold, stock adjustments, write-offs, stock takes, inventory discrepancy, all of those. And QBO's transaction detail by account report. These reports will help you pinpoint the exact transaction causing the differences. And remember, every discrepancy here is an opportunity to improve your processes. So once identified, correct these and sync again. Your COGS comparison of your P&L will look very similar to your sales comparison, which we did. Now for the grand finale, reconciling your inventory on hand figure on the balance sheet between QBO and Cin7 Core. This is often the most intricate part as it bridges the physical world of your warehouse with the financial world of your balance sheet. So this is where your warehouse manager and your accountant often bump it. So here's a crucial nuance. Your inventory account balance in QBO and your stock on hand on your inventory movement summary report in Cin7 won't always perfectly match, especially if you have partially received purchase orders or goods in transit. So for example, you might have received stock, so it's in Cin7 summary, but the invoice hasn't arrived yet. So QBO might have it sitting in a goods received not invoice account. These are perfectly normal timing differences, but they need to be accounted for and understood. So since we are aware of these differences, we need to calculate a balance in Cin7 that can be compared to the inventory accounts in QBO. So your starting point will be Cin7's inventory movement summary report to get the value of the on-hand inventory at your reconciliation date. After this, the financial transactions versus stock on hand difference report in Cin7 becomes your best friend. This reports help you understand those open POs and the goods invoice not received or goods received not invoice component. It is cumulative, so you have to be clever about filtering it up for a specific period. Only open POs where you expect to actually receive that stock in the future should be included in this report. So this report needs to be reviewed in detail on a regular basis to ensure that it is clean and it actually only reflects where you expect the stock to still be delivered, or it is actually really goods received and we're waiting on the invoice. So to get to our inventory balance that we can compare to our QBO balance sheet is we have our stock on hand from inventory movement summary plus our cumulative difference from the financial transactions. This is stock on hand report, and that then is compared to QBO. So this is how it will generally look. We have all our QBO inventory accounts, we have our inventory movement summary, stock on hand, and then we have our difference. Add those two together, and we get a final difference. So finally, you'll pull the balances for your inventory asset accounts, goods invoiced not received, goods received not invoiced, and you'll note from the example if there are raw materials, all of those inventory accounts from your QBO balance sheet. So when you add all the QBO inventory asset accounts together, they should align very closely with your Cin7 inventory value. And if they don't, it's time for a deeper dive. So this is where the true financial picture of your inventory comes into focus. So you've done the hard work, you've investigated, you've corrected, now it's time to finalize. After all that meticulous work, you might still have a tiny residual value in your overall inventory asset value. This is your adjustment amount. If an adjustment is needed to align QBO with Cin7, it should only really be done at year end, and it must be posted to a relevant COGS or inventory expense account that can be separated out of your system COGS accounts. And there's a critical rule. One we at Fiskal live by, and that's a strict 2% adjustment limit. This isn't just an arbitrary number. It's a health check for your entire process. If your adjustment consistently exceeds 2% of your total inventory value, it signals a deeper systematic issue that needs addressing, perhaps in your data entry, integration settings, or operational processes. Like you see, it affects everything, sales, purchases. There's so many processes behind all of these. So it means you're not just reconciling numbers, you're improving your entire inventory management system. Finally, after any approved adjustments, perform one last sync and rerun your P&L and balance sheet reports in both systems to confirm everything is beautifully aligned. And remember to document everything, the issues, the resolutions, and the adjustments. This documentation is invaluable for future reconciliation and continuous improvement. And no, you will not remember where the amount comes from. So document and have the calculations filed. So, what are our key takeaways from today? One is understand the data flow. Know how Cin7 and QBO interact and the accounting impact of each transaction. 2, prioritize pre-reconciliation. Before you even start with your pre-reconciliation, have your checks in place. Locked dates and clean syncs are your best friends. 3, be a detective. Ruthlessly hunt down and eliminate manual entries in integrated accounts and find out what the source of those were. What failed to get us to a manual entry and fix that. 4, systematic approach. Tackle sales, purchases, COGS, and inventory on hand methodically. As we've laid out the inventory formula, each component has a process. Tackle each one on its own, fix it, clear it, move on to the next. Lastly, proactive problem solving. View discrepancy not as failures, but as opportunities to refine all of your processes. So, accurate inventory recon isn't just about ticking the boxes, it's about gaining clarity, making informed decisions, and ultimately unlocking greater profitability and peace of mind for your business. It's about transforming complex numbers into clear insights. Thanks so much for joining me today. I hope this session has provided you with valuable insights and practical steps. I'm going to hand over to Heiko again.
Thank you, Salome. That was absolutely fantastic. I definitely learned quite a lot. So before we go into the Q&A, I just wanted to say a little something about Fiskal. So the things we've been talking about here today, those challenges around disconnected systems, lack visibility, unreliable reporting, that's exactly what we at Fiskal, we help businesses to solve. So, I mean, there's a few reasons that we love what we do. One of the best aspects of Fiskal is that we are both operational and financial experts. So we know a bit more background information about like the whole system. So there's both the accounting aspect and also the systems aspect. So we do have background on both. We don't just integrate a system and then call it a day. So we like to do like a more ongoing partner. We like to be an ongoing partner for businesses. It's not like we just leave you to struggle with the system we set up. And yeah, we've been doing this for a while. So just recently at the Cin7 Summit, we were actually awarded the accounting partner of DF 2025, which is a great honor. It's a position that was filled by Zero last year. So I mean, it's big shoes to fill. We're very honored by that. So if you're watching the stream and you'd like to make contact, here's a QR code on the screen at the moment. So just take a moment to scan that. You can book a call. Otherwise, just check out our website. Maybe even subscribe to our YouTube channel. Yeah, we'd be happy if you did that. So thanks so much. I think then without further ado, we can go into the Q&A. I think we have a few minutes. Well, we can go a few minutes over, I think, and then let's address some questions. Could you go on to the next slide, please? All right. So yeah, there are contact details on the screen also. And we did receive a question here on the chat, so maybe we should start out with that one. So Jaco asks, how often do you see the inventory movement summary report from Cin7 Core not agree with inventory on hand balance and QBO?
Surprisingly more often than not. And it is definitely due to the inventory accruals most of the time, or bad habits and bad hygiene by not closing off inventory or POs. So like we mentioned, POs needs to be closed before it can go into inventory on hand in QBO. So make sure that if the PO is fully received, all the goods are received, needs to be closed off in Cin7 so that can go into inventory on hand in QBO. So yeah,
okay.
More often than not.
Okay, great. So I hope that answers your question, Jaco. So I'll go on to the next question we received. So what happens if I lock my periods in Cin7 and not in QBO or the other way around?
Very important. Like we said, lock dates are the bounces. So important to notice that the lock dates do not sync between the two systems. So lock dates will have to be set up in each system individually. So if your lock dates are set in Cin7 but not in QBO, it won't really have much of an effect on the integration because Cin7 won't try to sync through journals before the lock date. But if the lock date is set in QBO and not in Cin7, that is when the bounces arrive. And there will be sync errors. In Cin7, you will see lock date sync errors because it won't be able to process the journals before the lock date. So really important to keep these two aligned and set it in both systems. And to clear those lock date sync errors, you'll need to either unlock it or manually address it to make sure that the two systems are aligned.
Okay, great. So I think let's take time for one more question. Do you have to do this on a monthly basis, or is it quarterly or yearly enough?
Monthly is definitely preferred, especially for entities where there are high volume of transactions and stock movements going through. As you will see, there are quite a lot of steps, and in all of those steps, there is quite a lot of space for something to go wrong. So it helps with troubleshooting and investigating variances if we do this monthly. And the sooner we find out any like pitfalls or shortfalls in our process, the sooner we can fix it and we become better. And if you do it monthly, it will go quicker as well.
That makes a lot of sense. All right, thanks, Salome. I think we're a bit over our time now, but I think that went great. And so yeah, we hope to see everyone in the next webinar. And thank you so much for your time, Salome.
Thanks. And thanks everybody for joining. Hope you learned a lot.
Bye-bye.
Bye.